Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is June 21 and we're starting from euro-dollar pair with Jakub Novak as usual. Although demand for euro rose due to the ECB's current account balance and statement made by ECB Vice President Luis de Guindos, the correction in the euro-dollar pair still continued. But today's interview with ECB Executive Board members Joachim Nagel and Isabel Schnabel will be about further interest rate hikes, so these, together with the empty macroeconomic calendar, will most likely lead to a further rise in the pair. Long positions buy euro when the quote reaches 1.0923 and take profit at the price of 1.0964. An upward movement may resume at any moment. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0892, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0923 and 1.0964. For short positions, sell euro when the quote reaches 1.0892 and take profit at the price of 1.0855. Pressure may persist in the event of inactivity at the daily highs. However, when selling, traders should make sure that the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.0923, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0892 and 1.0855. The next stage of our review is the next major. Dimitrios Tapas has a trading plan for GBP USD pair. Early in the European session, the British pound is trading around 1.2758. Below the 21 SMA and below the plus 1.8 Muri level, 1.2817. GBP USD made a technical correction after hitting a high of 1.2848. This pullback could give it a strong bullish momentum if it continues to move within the uptrend channel formed since May 29. The British pound is likely to resume its bullish cycle only if it consolidates above 88 Muri 1.2695. Which coincides with strong support at the bottom of the uptrend channel. One factor that could support the strength of the British pound is that the Bank of England could continue its tightening cycle. These could support the British pound and could limit its losses. Investors will be waiting for the BOE's policy announcement on Thursday. So, we could expect consolidation below 1.2817 plus 8 Murray level. And above 1.270088 Murray level. Another fundamental factor that could give strong volatility to the pound is that inflation data that will be published on the next few hours. In case the data is below those expected by investors, the pound could make a strong downward movement. On the contrary, we could expect the pound to reach the high of 1.2848 and could even reach 1.29. According to the technical chart, we can see that the British pound maintains an upward trend channel. In case the pound breaks this channel below 1.2695, we could expect a change in the trend and GBP USD could reach 7-8 Murray level. Located at 1.2573 and could even reach the 200 EMA, located at 1.2538. Our trading plan for the next few hours is to sell the British pound below 1.2788. Besides, if it reached plus 1.8 Murray at 1.2718, it could be seen as a signal to sell with a target at 1.2695. The Eagle indicator is giving a bearish signal since June 16. Therefore, any rebound could be seen as an opportunity to sell. The next in line is USD CAD currency pair. Area of Markmore presents. With the CCI indicator being held in the minus 100 and level 0 on the 4-hour chart, the USD CAD currency pair provides an indication of significant resistance, where in the price movements the existence of the resistance gives an illustration that a higher low occurs at each existence resistance, so that from these it can be concluded that the loonie has a significant decline, where as long as there is no upward correction that exceeds 1.3351, USD CAD will have the potential to break down to 1.3177 level. And if this level is broken, USD CAD will potentially fall to 1.3129 area level. Then 1.3036 as the main target and 1.3001 level as the next target to be tested. Once again, we've got an area of Markmore with his trading plan for mixed currency pair AUD-GPY. Let's have a look. On the 4-hour chart of AUD-GPY mixed currency pairs, it seems that the appearance of the selling pressure on these currency pairs can be seen by the appearance of 1, 2, 3 bearish pattern followed by the bearish Ross hook. Even so, to get the downside momentum, which is quite significant, AUD/GBY needs the upward correction. Moreover, usually on Wednesday, AUD/GBY generally has a tendency to rally, so that, in the near future, AUD/GBY has the potential to appreciate it up to the level of 96.47 as the main target, and level area of 96.65 and 97.09 as the second target. And as long as that rally correction doesn't break above 97.36, the AUD/GBY actually still under selling pressure. And finally, here's Laurie Bailey with AUD/USD pair forecast. The Australian dollar closed yesterday with 67-point decline, creating a new support level at 0.6755 due to the minutes from the latest Reserve Bank of Australia meeting, which turned out to be neutral, and the interest rate cut by the People's Bank of China. At that moment, the Aussie is also waiting for a signal from external markets in the range of 0.6821 and 0.6755. Consequently, a breakthrough above 0.6821, the peak on May 10, would give the pair a chance to retest 0.6900, while a break below 0.6755 would open the target range of 0.6704, 0.6712. On the 4-hour chart, the price has settled below the balance, red line on graphic, and the MACD indicator lines. The Marlin oscillator is in a negative territory. The resistance level of 0.6821 is reinforced by the MACD line. The bears have the advantage. So, that's all for today. See you online soon and good luck.